Thank you. Again, my name is Joe Bergeron. I'm with the Association of Vermont Credit Unions. And I don't remember the Great Depression either, thankfully.
I thought you did.
No, I don't, even though I look at it. And thank you, Matt, for inviting me to be one of the panelists here and to give you a little bit of an update on my little corner of the co-op world in Vermont, and that's credit unions and financial sector. I've been fortunate to be involved with different financial sectors and to have exchanges over the years with a number of those different sectors, and some people in the audience, some people at the table here. But credit unions is where my focus is. Matt could probably tell you as much, maybe more, about the history of Vermont credit unions and credit unions in general, because he did his master's thesis, I believe, on researching credit unions, and did it on Vermont State Employees Credit Union, did a history project for us about the Association of Vermont Credit Unions and its history of how credit unions came to be in Vermont. So Matt is going to, I think, sanitize and correct this portion of the recording anyway afterwards. A lot of what Roger said about the start of ag co-ops in Vermont and the Northeast and whatnot is the same as it was for credit unions. The idea of credit unions started in Europe, made its way to North America by way of Quebec, long before it made its way down into the United States. And the first credit union in the United States was, and is still in existence, the St. Mary's Bank is its name, not credit union, in New Hampshire. And it still exists today and very successful and whatnot. But credit unions came to be in the United States during the Great Depression, out of need for people to have some greater financial resources to help each other. Banks didn't want to do business with them, but banks remained. And the common person, all of us and most people in Vermont, had limited resources during the Depression and were trying to find a better way of life. And so they did two things. They headed west, a lot of them, and they came across this idea called credit unions and started to form credit unions. And so credit unions and the laws that permit credit unions to exist started in the 1930s. Credit unions in Vermont, the earliest ones, probably go back to about the 1940s or 50s or so. The high point for credit unions in terms of numbers of credit unions in Vermont was probably in the late 70s or so, where there were about 72 credit unions. Today we have 25 credit unions in Vermont. And that consolidation is no different than many other industries, whether it be ag-related or food stores or utilities or whatever else. And it comes about for a lot of different reasons. Economies of scale, a lot for credit unions. Also, we went through a phase during the 80s where the regulator, the federal regulator, found it easier to shut down credit unions than it was to try to resuscitate them and set them on the right path and whatnot. Because there were so many credit unions. There were, in the 80s, 23,000 credit unions nationwide. Now we have 7,200. And so when you have 22,000 credit unions and you have a handful of problem ones, from a regulatory perspective, it probably doesn't take a whole lot of thought process to say, well, let's not spend our time with that. Let's pick our battles and spend our time where, we get a greater return with larger credit unions and more involved credit unions and whatnot, and some of those little ones. So we lost a lot of Vermont credit unions because they were all pretty small in the 80s. The other thing I would tell you is that credit unions today, those 25, although they're much fewer in number, and the same thing nationally too, they're many times larger. Credit unions of the 40s, 50s, 60s, 70s were very isolated kind of institutions. It'd be a credit union formed by a small group of people for the employees of the company that they worked for. And it would serve them and their family members, and that's about it. And replicate that among church parishes and small blue-collar manufacturing plants all over the countryside, maybe a few that were community-based here and there in some very small towns. Credit unions started to, expand a little bit only through the fact that people that were members of that credit union, somebody who worked at some manufacturing plant and did business with a credit union, left there, went to work someplace else that maybe also had a credit union, and they joined that credit union started to, I guess I'll say, cross-pollinate a little bit, but that's a pretty slow means of expansion. Today, by contrast, there's 25 Vermont credit unions. There's very, very few of them, and the 7,200 or so credit unions nationwide, there's very few of them that are based in a single sponsor situation, meaning that it's just for employees of ABC company, or just one very tiny community, or just teachers of one school system, or something like that. Most credit unions today are geographically based, community based, meaning that anybody who lives, works, or resides within a number of different towns or a county or whatever can be members of that credit union. Los Angeles, for example, there's a credit union that takes in anybody who lives or works in the city of Los Angeles. You can imagine that credit union and the number of members it has is many times larger than all the credit unions in Vermont put together. And yet it's just one community. Credit unions in Vermont today occupy, or they have about, I'm proud to say, about 322,000 or so members. That's about 1 out of every 2 Vermonters. So if the person on my left isn't a credit union member, the person on the right is. And that goes right through the Vermont State House with legislators, which is a good thing for us, and through people of all walks of life. Those people together have amassed about $3.4 billion in assets in those credit unions. That's not their deposits. Deposits are something less than that, but the total assets of those 25 credit unions is about $3.4 billion, give or take. There's probably about 80 branches today of credit unions throughout the state of Vermont, scattered all over the place. And they employ in total probably about 800 people, and probably about 300 people, like all of us, are volunteers on boards of directors of different committees in those 25 credit unions. In spite of the fact that they're much larger than they were, they still operate by the same principles, co-op principles, and for the same purpose that they did when they were formed during the Great Depression, and that's to help people help themselves. So much like in every other kind of co-op, the profits of those credit unions, there's 25 in Vermont and 7,200 nationwide, go back to the people that do business with that credit union. And one of our great challenges as credit unions is both with consumers and with legislators, be they in Montpelier or another state capital in Washington, is to impress upon people to correct the default image that a credit union is a bank that doesn't pay taxes. Credit unions do pay, payroll taxes like all employers do, and property taxes and so on and so forth. What they don't pay is any form of corporate income tax, like all cooperatives, I think. And banks in Vermont they pay franchise tax, which is a form of a corporate tax on the deposits that people have in the institution. And they would very much like for credit unions to pay that tax too. And we keep trying to impress upon legislators and consumers that a credit union is a cooperative first that provides financial services. And, I, for one, prefer that context than the other way around, and it's easier to understand. I already mentioned about the people who belong to those credit unions. It used to be very narrow, but now it's pretty broad. The range of credit unions, by the way, that 3.4 billion, don't think that it's equally divided amongst all of them, or the 320,000 members. We still have some very tiny credit unions by today's standards. The smallest credit union in Vermont is somewhere around $500,000 in assets, which is very small for a credit union by any standards nationwide, and is operated by one person whose day job is a postmaster of the post office in his small town, and he operates the credit union out of his home. And then at the other extreme is New England Federal Credit Union, which is the largest in the state, That one has, hundreds of employees and branches, not all over the state, but throughout the area that it does business, in all the modern conveniences that you might associate with any financial institution in terms of, all the different types of loan products and savings products and so on and so forth. I should tell you that as cooperatives, credit unions also work a little bit differently than their for-profit alternatives, in that just like we all share amongst ourselves to form these different types of cooperatives that are represented here, credit unions as entities share between each other to their mutual benefit to get economies of scale, because they can't compete, obviously, or Vermont Credit Unions can't, with the likes of, you name the big banks, Citibank, Chase, so on and so forth. So, for example, we have all credit unions in Vermont, I believe, that have ATM participation and issue ATM cards, all participate in the shared ATM network. A national one that's a surcharge-free ATM network for members of Vermont credit unions that has about 30,000 locations. Even in the Federal Credit Union, even the largest credit in the country is not going to have 30,000 ATM machines. But we can say to our members of each one of those Vermont credit unions, you have access to your credit union funds at 30,000 ATM locations. You can withdraw that around the country, internationally, as a matter of fact. Likewise, there's some credit unions, not all, because there's a technology thing to deal with here, but there are some of the larger credit unions that are able to participate in a shared branching network that we have, meaning that as a member of that credit union in Vermont, you can go do business at any of 5,000 locations throughout the country, which are the branches of other credit unions that are participating. So when you walk in, they can pull up your account information on a screen, and with some limitations as to what they can do because you're dealing with another credit union, you can transact a lot of the same business. For example, my son, who belongs to Vermont Federal Credit Union locally in Burlington, Vermont, is a resident of Boulder, Colorado right now, and he does business, I think it's at Red Rocks Credit Union out there, where he can transact all of his business with Vermont Federal Credit Union directly as if he was in a Vermont Federal Credit Union branch. That's unique to credit unions. Banks don't do that. It's quite an accomplishment, and we're proud of that. We're also proud of the fact that in Vermont, we do something a little bit unique cooperatively, in that the association that I operate, which is the Trade Association of Credit Unions, and two of the credit unions in the state, and three of the community banks own jointly an ATM network of about 100 ATM machines just in Vermont. We don't physically own the machines. It's the machines of the different entities that are part of that little network. But we all can use each other's machines locally. And much as legislators and the public and even bankers think that credit unions and banks are always at odds with each other, which is a fallacy. Credit unions don't have a problem with banks, but banks do have a problem with credit unions. We're able to work together because we have common needs. So even our for-profit brethren, when they have a common need, they're willing to work with us to a mutual benefit. And the most important thing that Vermont credit unions do, much like all cooperatives, is return benefit. Besides providing a service, return benefit. So in Vermont, we do studies every month actually, of the rates and fees charged by different financial institutions, both for-profit and not-for-profit, I should say. And in Vermont, the average credit union household, so like my household, Roger's household, saves about $200 a year by doing business with a credit union as opposed to doing business with a for-profit alternative. It used to be 70s, for example, 40s, 50s, 60s, where credit unions would issue a check, an interest rebate, back to the borrowers of the credit union at the end of each year. And that fell by the wayside for the most part because it was only benefiting the borrowers of the credit union. But it takes, two to tango. You can't lend money out if somebody didn't put it in. So depositors and borrowers. And so to benefit both of them, what most credit unions do today is just return the profits of the institution, so to speak. Instead of going to a small subset of shareholders, stockholders, it goes to all the shareholders, which is all the members of the credit union, just like it does in all the other cooperatives. But we do it through lowering the rates on loans or giving better rates on deposits and so on and so forth. And in this survey that I get access to pretty much on a monthly basis of Vermont Credit Union bank rates and fees, they survey probably, 30 or 40 different categories of different kinds of rates and fees on loans and deposit vehicles and so on and so forth. And credit unions beat the for-profit competitors in every single category, probably 99% of the categories. There's a few instances maybe in some types of mortgages where they don't. But for all the regular services that you and I, have need for on a regular basis, credit unions beat for-profit financial institutions. That $200 is the average, so that doesn't mean everybody, gets that $200 in savings. That is representative. For example, if somebody goes and borrows for a new car, and let's say somebody takes out a 5-year loan to pay for a new car, and let's say that amount is $25,000, and scale it up or down to your particular situation and whatnot. That person's going to save about $200, $225 a year on the difference in the interest rate from doing business with a credit union versus with a bank. But that also applies to that $200 in savings. The average is made up of those people who are a member of a credit union but don't do anything with it. They just put in their initial $5, $25, and they never did anything more. And then you can imagine at the other extreme, the person that's got their mortgage, their checking account, their credit card, and so on and so forth with the credit union. So those people are saving a lot more than $200 a year than everything in between. And just one last point to make, what are the issues, the challenges in today's credit union land in Vermont, and I think it's representative nationwide. It's ironic that credit unions started in this country during the Great Depression, and it was during another financial recession, that mortgage meltdown, 2008 up until recently, where credit unions started to garner lots of attention again. They were successful before, but they just kind of skyrocketed in terms of popularity and in deposits over the past 3 or 4 years because of people's need, again, to deal with a locally owned cooperative financial institution. That's the good part about it. The bad part about it is everybody's saving, people aren't borrowing, and so it's tough to, make enough money to pay substantial returns back to the members of the credit union if you got all this money coming in, you got to do something with it to fund it back out. So that's the challenge today for credit unions.